Hello, everyone. Welcome to the TF Blockchain Podcast, where we interview blockchain and digital currency innovators building our distributed future. I'm your host and founder of TF Blockchain, Jonathan G. Blanco. TF Blockchain hosts premier conferences, events, and media featuring blockchain leaders actively growing the industry. With our platform, we are connecting business and technology executives with blockchain innovators leading the charge. Through our interactive speaker presentations, facilitated networking sessions, and our video and podcast series. Before we get started, wanted to tell you about our consulting arm, TF Agency, where we work with blockchain companies, companies looking to adopt the technology, entrepreneurs and investors looking to understand the space, and with those looking to grow their career in this emerging industry. For more information, please email us at info@tfagency.io. This episode is a live recording at our TF Blockchain Vancouver chapter held on June 13, 2019, where I interview Kory Hoang, CEO and co-founder of Stablecoin, a stablecoin blockchain company based out of Seattle, Washington, which has developed a fiat collateralized stablecoin to help with price volatility during transactions. In this discussion, in front of our Vancouver community, Kory and I discuss how he came up with the concept for Stablecoin, how he got his co-founders to join him, the differences between Stablecoin and other stablecoins, his thoughts on the recent Facebook announcements with Libra, and how stablecoins present an interesting use case for retailers and brands to establish in-network currency. In full disclosure, Stablecoin has sponsored our past 3 TF Blockchain conferences. I really enjoyed my conversation with Kory, and we had a great interactive discussion at our most recent TF Blockchain Vancouver. I hope you enjoy listening to this episode as much as our Vancouver community. Make sure to follow all future live recordings at tfblock.io. Hey everybody, thanks so much for listening. I'm really excited to introduce you all to Kory Hoang. Kory Hoang's the CEO and founder of Stablecoin. They've been a great partner of TF Blockchain since the beginning. Kory, introduce yourself to everybody.
Hey everyone, my name is Kory. I'm the CEO of Stablecoin. We're a stablecoin startup from Seattle. We're VC backed, and our stablecoin is listed as one of the top 5 stablecoin on Binance at the moment. So yeah,
let's dig right into that. So CZ, does everybody know who CZ is? Right. So CZ Binance, he actually tweeted about it, so it must have been a big deal. Take us through that whole process. How'd that happen? How did you become the first stablecoin listed?
Sure. I guess maybe I should take it all the way back. Since day one, right?
Okay, well, let's start there then.
Okay, so I bought Bitcoin back in 2013. Was that too far back?
No, let's do it. Actually, I want to hear you before that. Tell us about middle school.
Oh, okay. I'll keep it at 2013 in the interest of time. So I bought my first Bitcoin in 2013. I didn't really trade it or hodl it over time, so I traded most of the time. Lost most of it, and then the bear market came in 2014. Kind of lost interest up until 2017. The market started picking back up. This time I got a little bit smarter, so I started building some algorithms to start crypto while I was working a day job at PitchBook as a data analyst for private equity.
So you built the algorithm yourself?
Yeah. So the algorithm were, just very 20, 30 lines of code, very simple momentum-based trading strategies to capture the momentum of Bitcoins and Ether. When it goes up, buy. When it goes down, sell. It couldn't have been much more simpler than that. And because the market was in a bubble, it was a great time to do that. And so while I was doing that, I started accumulating more and more funds. And Tether was the only other stablecoin that I could use at that point. There was absolutely no other stablecoin that was reliable. And so I felt that at that moment, there was a hole in the market. Like, I'm sitting here with 30, 40, 50 grand, trying to put it into a stable coin that's reliable, and I can't find one.
You saw that
how many other people like me out there, was doing that. So so I got together with some really smart friends from Amazon. They were software engineers there, and we wrote a white paper to talk about, how we could create a much better Tether.
When is this, by the way? What year is this?
This was 2017. It was the summer, July, August.
Yeah.
So we started writing this white paper about the stablecoin, how we could create a better one than Tether, how to make it more transparent, how to make it regulated, how to potentially monetize off of it and grow it over time. And by the end of 2017, I had some money from trading, and it was kind of like at the peak of the bubble, and everyone was, really wanted to do something different. And so I just decided, let's join everyone else, and I left my job and started pitching about this idea to create the stablecoin startup. The Amazon guys somehow listened to my advice as well. And
is this David?
David and Amia, and we met up with Brian, who was working for T-Mobile as a product consultant as well. Everyone was having a good job. I mean, I think I made the least money out of all of them.
That's why you talked him into it. You're like,
yeah. So like, they were making like 150, 200 grand a year, but I left all that just to, be a part of this because they believe in the vision. They thought it was a big deal.
Yeah.
So we incorporate the company originally in Vancouver in February of 2018.
So and the Vancouver-based company, huh?
Well, we started out here. The reason was I'm from Seattle. We're all from Seattle, but the reason was in Canada, the barrier to entry for the stablecoin for a stablecoin company was a lot lower according to our research. So we figured we'd go to market in Canada first. And that's what we pitched to the VC. We talked to 500 startups and BNext Ventures around February, March of 2018 of last year. And then by April, they decided to fund us. We got some more angel investors from Seattle and from Canada to join in, and we got $500,000 to start the projects. And and then within a few months, we found out about Prime Trust, which is a U.S. trust company that was willing to help us go to market in the U.S. So that barrier to entry in the U.S. was now like basically gone.
Yeah.
So we decided to
tell everybody a little about Prime Trust because I think not everybody's familiar with them.
Yeah, Prime Trust is Prime Trust is a Nevada charter trust company that conducts, regulate trust company activities, and they are the official regulated trustee for the fiat deposit that we have that backs up our stablecoin, and they are also the official what they call a administrator/issuer of the token. So Prime Trust, as a regulated trust company, they're regulated on the, and licensed on a level similar to banks. So they're the one who's officially licensed to do this in the U.S. for us. And we service Prime Trust as a technology service provider. So we basically built a button to issue or redeem stablecoins, but we don't press it ourselves because we obviously are not regulated to do this. Prime Trust would then be the regulated entity that has the final authority on whether or not they want to issue or redeem it after they have done KYC, AML verification on the clients, basically. So that's what Prime Trust does,
cool.
In a nutshell. And after partnering up with Prime Trust and shifting our focus back to the US, I think we finished development of the token in a smart contract back in August of last year.
2018.
2018, and that was when it passed smart contract auditing. And then we started talking to exchanges, started talking to market makers and investors to start getting this token listed. And
so going just to pause for a second on the auditing side, and what platform did you put Stably on? Is it Ethereum token? What kind of token? Or is it your own?
Sure. We built the first version of our stablecoin on Ethereum. It is based on an ERC20 smart contract, and we chose Ethereum very simply because it was the most adopted protocol out there. We actually have a protocol agnostic initiative where we want to be on as many popular protocols as possible. We don't want it to just be pigeonholed down to any single protocol. It's kind of like back in the 90s. You have OS, you had Windows, you have Linux, you have Ubuntu and all this stuff, right? You don't know which one of these platforms is going to take off, so just kind of spread your bets out, and it doesn't really cost us much to expand onto these platforms. So,
for sure.
So we started out on Ethereum. We got the smart contract audited, and while we're speaking on auditing, how we stay transparent and credible to the public is we conduct monthly attestation of our reserve. So there's a third-party auditor. It's a CPA firm called Cohen & Company. They come in every month. They look at the account, check to see how much money's in there, how much fiat is in there, and then how much token we have issued. And every single day, or 24/7 actually, we use Prime Trust API, and we report the balance of that account straight onto our platform. So as soon as you log in, you can see how much money we have in there. versus how much has been printed on the blockchain. So that's how we, stay transparent and gain the trust of the public and, convince everyone that there is indeed a full dollar backing every single stablecoin that we have minted.
And let's clarify why that's so important, right?
Yeah, obviously that's very important because a lot of time people don't really understand how a stablecoin can stay stable in the market, and it really just boils down to trust, right? If you trust that this thing is worth $1, then as soon as it's dropped to 99 cents, what are you gonna do? You're probably gonna try to buy it so you can turn it back to $1 and make a penny profit, right? Vice versa, if it's somehow trading for more than $1 in the market, you can come back and buy from me for $1 and sell it for more than $1, and that in itself kind of stabilize the price and push it back down.
Yeah.
So trust is highly important for the stability of our token as well as the tightness of the spread. So the more trustworthy we are, the easier it is, and more quickly it is for people to issue or redeem our token. The more efficient our stablecoin stays in the market.
And there's also a couple stable projects out there that don't necessarily have their token backed fully to fiat, right?
Yeah, so these are other types of stable coins that are not backed by fiat, but they are either backed by cryptos, other assets like gold, or not backed by anything. They just have a smart contract that kind of mess with the supply of the token in order to theoretically peg the price to $1. Yeah.
So it sounds like you're talking about the diet right now, and that they're over collateralized across a number of different assets. So with regards to the collateralization of your token, was that an additional investment that your investors brought forward, or where did that come from?
You mean the initial market cap of our stablecoin, or?
Because obviously you have to be on par with however many tokens you're going to issue.
Sure. Yeah. So the reserve that backs up our tokens comes from our users. So from people who from market makers to the ordinary person to even our investor who are also user of our stablecoin. So that helps start the initial market cap, and then over time, as more and more people deposit more money into the reserve, we start printing more and kind of grow from there. And that's how kind of a stablecoin gets sprung into existence, I guess.
Yeah. So you're dovetailing into organic ownership.
Organic ownership, and to us, organic stability is also very important. Meaning, whatever that is supposed to be pegged to, you should back it 1-to-1 with whatever that is. If it's a gold token, great, back it with gold. If it's a oil token, back it with oil. Don't back an oil token with gold, because then you start having some funky effect in the market. Obviously, you can engineer it, right? You can do a lot of engineering wizardry, kind of like how they did with mortgage-backed securities back in 2008 to make some, turn a pile of, BS into something fancy. But it works until it doesn't. And that's why, originally when we started the stablecoin project, not just me, but, the whole team decided that we're going to go with the fiat-backed approach because it's easy, it's sensible, it's practical. And, we're not going to introduce risk into the ecosystem by doing this. If you create stable coins that are, stable for today, but maybe not so stable tomorrow, that creates more inherent risk in the ecosystem that could screw over someone someday, right? Imagine if, you sold something for someone online, they sent you these inorganic stable coin. The next day they drop like 20 or 30%. Like, how would you feel, right? That's why we decided to go with the fiat back model initially.
Cool. So I cut you off. You were talking about how you went from to the fiat based model, and then
and then so I think we were around August 2018 now. So we launched on Ethereum, and so now we started talking.
Sounds like right around when we met, like right around then.
I think we met a little bit earlier.
A little bit
earlier. Yeah. But that's when we started thinking about going to market now, right? How do we get market makers to come in and buy the stable coin, start the initial market cap? How do we get listed on exchanges? And, it's, I think it's just through a series of fortunate events, just luck. I got connected with, first of all, Bittrex, which is, right there in Seattle. You just walk down the street and have coffee with them. Like, hey, you guys want to list stablecoin? We're from Seattle too. And they're like, oh, cool. Yeah, send your application over. We'll look at it. There's no listing fee. And I was like, oh, wow, awesome. They don't charge listing fees to anyone. So that's one of the great things about Bittrex.
Yeah, they're a great company.
Yeah, their trading commission is a little bit higher than the industry average. They've lowered that recently, but if you don't charge listing fees for a project, that gotta come out somewhere, right? So
right, because listing fees are crazy, right?
Yeah.
I mean, like 30, 40, 100,000.
Yeah. And running an exchange is not cheap neither.
Right.
So anyway, we talked to our investor, our market makers, and to some of the initial users, and we told them that, hey, we got this deal to list on Bittrex, and it's coming soon. And there was, we need to kickstart the market cap initially to get it going. So I think for Bittrex, we got $2 million from everyone to bring onto Bittrex to initiate that market. So that was in December. And then right around that time too, I got the deal with Binance. So Binance actually contacted me, I think back in September or October, and they literally just drop a message on our website through the communication form, the message form thing. And at first when I first saw that message, I was like, "There's no way this is Binance."
You're being catfished.
Yeah, I was being catfished or something, right? But then I saw that the email address that I was supposed to reply to was at Binance.com, and I was like, what the heck, maybe I should just try it out. And then came a reply from blah 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 at Binance.com, and I was like, oh, wow, okay, so this is the real deal now. And so we scheduled a call. We hop on the phone with them. We talked to them about our project. We told them what we were working on, what our vision is, and our plans to achieve that vision, and just kept it very transparent with them. And I think that's one of the comments that I've received from them, that we really didn't hold anything back. We were very transparent and straightforward with them, where they talked to a lot of other stablecoin projects that they wanted to list. A lot of the other stablecoin didn't divulge as much info due to either, they may be afraid of Binance stealing their secret sauce or whatever reason, right? But we were different, and because we were very transparent, and they saw that we didn't raise a lot of money. We raised $500,000 of seed funding, which is 80 and 90% less than all the other stablecoins projects out there.
Sure, definitely.
So the average stablecoin project raised more than $2 million for seed funding. And when you look at projects like Trust Token or Circle or Paxos or Gemini, even, they raise hundreds of $millions to get started. But here I am, just being the underdog essentially. Yeah. And I think that that made them like us more.
Yeah.
I think. And so we had some negotiation, and by the end of the year, they told me that, hey, it's time. I think you got the deal. So when do you want to list? And I told them, can I list in April? Because I need to get some more funding, get some more investors and market makers to back us to get on Binance, because Binance is huge. You don't want to just go up there with like a little bit of capital. What if a bunch of demand come in and there's not enough inventory and the pecs start to break?
Can you explain that a little bit for everybody? So what do you mean by that when you're saying like, hey, like there's not enough inventory, you're supplying the inventory?
Yeah, so it's not my job to enforce the peg on exchanges. That's the job of the market, right? If the peg is if the price of my token is for whatever reason trading more than $1, then it's the job of market participant to go out and get stablecoin from me for $1 and go back and flip it in the market for whatever they can at the moment, right? And they profit from doing that. And because that is the case, and as long as I maintain my one-to-one redemption promise, then by natural market forces, it will arbitrage away all of that. But if there is not enough supply or inventory out there to, for example, sell into the market when the price is above $1, then it costs the price to stay at a premium over $1, and it could go even higher if there's more demand and not enough supply. So it's basically supply and demand, right? You have a lot of demand, not enough supply, price start going up. If you have a lot of supply and not enough demand, price start going down. And by arbitraging the difference between that, that's how market participant stabilize our peg and keep it at $1.
Got it.
So to get on Binance, we want to make sure that there's enough liquidity and there's enough inventory so that the peg won't just like shoot up to like $1.20 or $1.50. So they told me that they want us to list like literally within like a month. And so I'm like, okay, dude, this is the holiday season. I don't even know if any investor is going to pick up the phone to answer my call, which is precisely what happened. Nobody picked up the phone to answer my call, right? And so, but we had that deal. So we had to get the money somehow. And so I think it was the most stressful Christmas season ever in my life, and New Year. My birthday's on New Year too, by the way. So that wasn't the worst birthday ever. To like just trying to figure out where all the money is, where all the investors are, where all the market makers are, waiting for them to respond over the holiday season. And
so you're trying to get them to put their tokens onto Binance?
To take their own money, get some of our token, and bring it over to Binance so that we can start trading and list. Believe it or not, we did it. I think by the end of January, we raised our next round, and along with that, we also got a bunch of market makers and investors to use their own capital to purchase our token to bring it onto Binance to be this liquidity provider for us. When we listed on Binance on February 5th, which is Chinese New Year too, by the way, very lucky day. We had more than $7 million in total market cap at that point. And it went from 2 to 7 within like a month for that to happen. And ever since it's been like I think 4 months since we listed on Binance. I think a lot of the market makers have redeemed a lot of what they originally put up. But ever since then, we also had like extra growth on the market. So our market cap right now is sitting at around 6 million, but in net growth, we had about 3 million in new token distribution out there.
Very cool.
That's about 20,000 new token and a little bit over 20,000 in new token distribution every day. And our goal right now is to grow stably and get more funding and build more sales pipe and get on more exchanges, etc., so that we can 5 to 10x this token distribution rate in the next 18 months or so.
Very cool. Very cool.
Yes.
Go ahead.
So can you speak a little bit more about the liquidity and the pairs when you actually listed? Like, were you providing liquidity on both sides of those pairs, and what were those numbers?
I wasn't we Stably as a company wasn't providing liquidity because we don't trade our own token, and we're just a service provider to Prime Trust, who is the official issuer of it. So when we go out and we find market makers, we simply tell them that, hey, there's this opportunity. You can bring your own capital. So the market maker at that point is basically a user of the token. So they can bring in their own capital. They can, let's say they bring in $10,000, they get 10,000 token. Now they take that 10,000 token, they bring it over to Binance, and now once we start listing, they can start market making the pair for us, right? And maybe they'll start selling their $1 token for like $1.00001 or something. And even it's a minute difference to other market participant, like regular traders, they don't care. But to this market maker, if they do it in a lot of volume, then they can make some decent profit from it. And this is how everything works, from stocks to ETFs to any cryptocurrency. You need to have market makers out there to provide liquidity.
You had a question?
Yeah. Well, first of all, I think that your story is really impressive. There was a Tether, right, with billions of dollar market cap, and you were like a David versus Goliath who went out to the marketplace to try to become big guys. And I mean, we're at Tether right now with their Bitfinex situation. But you say that basically the model of the stablecoin, to make sure that it's stable to that concept, is that there is a self-regulating factor to it, right?
Right.
With the market. So the market participants basically dictate whether it goes down, up, and then basically regulate. But financial markets are can be outside of the model, or any model, right? They are chaotic and can be very easily. So do you have any force majeure type of situations where you're actually going to go, or Prime Trust, or you as a company going to go to the market and intervene as a central bank to keep your stablecoin stable?
It's not
real quick, can you kind of like restate that question for those that might not quite
Sure.
understand it?
So is it our job, is it Stably's or Prime Trust's job to go into the market and intervene, similar to a central bank, in order to restabilize the peg if it ever breaks? That's essentially your question. The answer is no. We don't have a mandate to do that, because us as the Stably as the service provider to Prime Trust, and Prime Trust as the official issuer of this token, our only mandate is to maintain one-to-one parity when you come to us, right? You come to buy from us or you redeem from us for $1 per token. That's what we allow. Whether or not how much it is trading out there at the market, that's not our job to go out there and enforce it. If it was our mandate to do so, then we would be forced to like go out there and trade our own token essentially, and which is something that we don't want to do right now because there's a lot of uncertainties regarding, you creating your own token and going out there and trade it. There could be accusation of, manipulation of your own token and whatnot. So we want to steer away from that.
You don't do these functions. You don't have that mandate because it's sort of like a separation of duties.
Correct.
Right?
Correct.
In order to avoid conflict of interest and things being shady.
Correct.
Let's say.
You're talking about a token reserve.
Well, yeah, but then you say they have reserves, Prime Trust, and they audit it on a monthly basis. But then all of this money, do they actually sit as a physical cash in a vault, or are they actually just digits on the screen in a bank account?
So Prime Trust is a trustee. A trustee ultimately need a custodian, right? The trustee doesn't actually hold the money. They basically take accounting or management of the money. The money actually sit in a bank account with Pacific Mercantile Bank and a network of other banks as well. So yeah, it's sitting in a bank account somewhere earning interest, similar to, and the bank accounts are FDIC insured as well.
Mm-hmm. So it's not a cash, so it does have that fractional reserve factor to the money that is sitting in like a digits on the screen, right?
Fractional reserve in the sense that yes, the money's inside the banking system and the bank itself, does fractional reserve and fractional lending and all that. Prime Trust does not, neither Prime Trust or Stably lend out any of that, right? So we have 100% reserve 24/7. If we go to the bank, then the bank has to give us back that 100% reserve. And if the bank doesn't have that money because they lend it out and they're short on cash, now we have a banking crisis on hand where the FDIC or the regulators come in and potentially bail that bank out or not. We hope we don't get into that day because, if that day happens, then a lot of other worse things probably happening in the market as well.
But basically, if you grow and grow and grow your company, let's say,
right,
and you issue more and more and more stable coins, and let's say you get to like a few hundred, let's say a few billions, 5 billions, and then those money are still sitting in the bank. The bank are still, essentially, that's their mandate to loan that money out, right?
Sure. Okay. So right now, the most easy and scalable way for us to do this is just to put it straight into a trust account, which is ultimately custody at a bank account, right? In the future, once we get more larger and bigger in size, we can go directly to U.S. Treasury. There's no need to sit in a bank account. And U.S. Treasury is,
right,
full faith and credit U.S. government. If that tanks, then again, there's way worse things you got. What stablecoin? I should be buying Bitcoin.
Yeah, for explaining.
Cool. You had a question?
Yes, one last note. Trade wars never end friendly. So that is one thing with the U.S. Reserve. But my question is, I was really interested with the arbitrage. And I guess when you mentioned about there being a premium and obviously an opportunity for either retail or institutions, how long are you thinking of having a premium before it gets filled?
We don't.
Is it based off the seconds, or can it be like a?
We have no clue how long it's gonna be there. Again, we don't cost that premium.
Exactly.
We simply, I tell you, you come to me, you give me $1, I give you one token, or you give me one token, I give you back $1. That's all I do. If it's somehow trading at a premium in some Hong Kong market in a dark alley somewhere, I don't know what happened over there. People play mahjong with my stable coin and it's at a premium. I don't know what happened, right? So
I guess my question for you is, let's say if it's at a premium, they wouldn't obviously cash out through your provider. They'd go through the third party exchange, etc. But would you guys be, let's say, in a sense, guaranteeing that if, let's say, there was a discount, they can sell through you to make sure that their store of value is still secured?
Sure. One-to-one issue and redemption 24/7. That's our mandate. So, if for whatever reason Joe's or Bob sells you, USDS for 90 cents just because he's too lazy to go through the onboarding or whatever redemption process or whatever, and he just want to sell it to you. If you want to buy for 90 cents, then sure, you get that, and you can always come back to us. As long as you pass KYC, you can get $1 out of it per, one-to-one per token.
Great, thank you.
Yes, sir.
Yeah, could you please explain how do you make money?
How do you make money?
Yeah, so we have this question a lot. So how does a fiat-backed stablecoin project makes money? There's a lot of ways to make money. the the easiest and most immediate way for us to make money right now is to earn interest revenue on the fiat reserve. So again, the fiat reserve, it earned interest just like money in your bank that sits in a saving account, earn interest. And the interest is similar to the Treasury, US Treasury risk-free rate. So that runs about 2.4, 2.5% a year right now. So
6 million for that.
yeah, so on 6 million right now, it's not a lot of money, right? The dream is to get to billions and trillions of reserve one day. So that's basically, you know, the reason our venture capital investor invested in us, and that, you know, they believe that in the future, stablecoin is going to be this next generation of money, a programmable money that can add a lot of additional values over traditional money, and that could end up replacing traditional money supply, which, you know, is in the trillions and trillions of dollars. So
Yeah, so let's touch on that, right? So if you know, investors believe stable coins to be like this interesting use case, you know, a lot of people talk about like cryptocurrency and payments, like, you know, spending things and buying things with Bitcoin or buying things with a token, right? Like, it's interesting when you'll see people on Twitter talking about like Bitcoin is amazing for transactions. It's like, but no one wants to spend it, right? So like, it doesn't matter if it's amazing or not if you don't want to spend it because of volatility or because you believe it's a store of value. So, you know, stable coins become very interesting when you think about commerce transactions, right?
yeah, absolutely. Payments is the biggest use case that I think, I wouldn't say biggest, maybe next to remittance. It's either one of those two is the biggest use case for stablecoin, I believe. Of course, Bitcoin, very volatile, right? It's very hard to keep the value of what you got paid for, or, you know, what you're paying for. So
yeah, like, so everybody's familiar with Stripe, I'm sure. So Stripe is a payment processor. They actually used to accept Bitcoin and as part of like the payment processing, and they stopped. And one of the biggest reasons they stopped doing it was actually because people would complain that when they would, you know, make the transaction, or by the time the transaction actually was fulfilled, there was too much price volatility, right? So they would either be like, they would need more cash, more fiat, or less, or they'd be overpaying, right?
Mm-hmm. Yeah, it's not very ideal to use volatile things for money, right?
Yeah.
What was the first volatile thing that people used for money? Gold, right? So, and people eventually realized, you know, gee, gold is probably not the best way to do it. How about I'll make pieces of paper that you can redeem for the gold instead, and, you know, then come the birth of paper money and all that. So, stable coins, very similarly, in the 21st century, it serves a very similar function. The benefits that stablecoin have over traditional money is, first of all, speed. How do you send fiat to someone across, like me? How do I send $100, $200, $300 over to my cousin in Vietnam, right? Who, you know, don't make that much money. So every couple of months, I would have to use Western Union or Remitly or TransferWise or whatever. The average cost for you know, remittance is about 5 to 6% per transaction. If I use a stable coin, I literally send it. I buy a stable coin for nothing. I send a stable coin for next to nothing. So all in all, when my cousin in Vietnam received that stable coin, the only thing he has to do now is convert that stable coin to local fiat. And based on what I'm seeing in the market right now, that spread is less than 1%. It's 1 to 2%. So it's already like, you know, 50 to 60 to 80% better than the average cost of remittance.
Right.
Now, when you're looking at payment, right? Visa and MasterCard charge merchants 3 to 5% per transaction. If their customer use stable coins to pay for their merchandise, then that merchant doesn't have to pay that 3 to 5% to anyone, to any Visa or MasterCard. So there's a huge opportunity for stablecoins to come in and completely disrupt the entire financial order out there. There's a lot of money that could be saved. There's a much faster time for the transaction that could happen. And also a lot more transparency, right? Stablecoins are all in the blockchain. You can easily verify where all these things are and whatnot. And think about how international corporation has to manage their treasury, pay all their people all over the world. Shipping companies, they gotta pay their sailors on these ships that, you know, sail the 7 seas and whatnot. And countries that have a lot of capital control, you know, or think of Venezuela, right? So I think the potential out there for stablecoin is huge, and it's just a matter of time before people get smarter about it and start transitioning to this new tool.
Well, and ultimately that's like why JP Morgan did it, right? Like that's why they're doing their version of it, of course, right? But it's for their own in network. Love to hear what you kind of think about that, how they've, talk about this cryptocurrency, but it's in network just for them and so forth. Do you think other banks will adopt it, or other merchants might adopt something like that?
Yeah. Hey, forget JP Morgan. Let's talk about Facebook, right?
Yeah.
Facebook's creating their own stablecoin apparently, and they're getting Uber, they're getting PayPal, they're getting Visa, MasterCard, whatever, to sign up to be their partner in issuing this.
Yeah.
And the idea is like mine. They want to create a stablecoin that has all these extra benefits over traditional money, and Facebook already has a large network effect.
Yeah.
So obviously, people ask me this question a lot. Are you guys worried that Facebook's going to choke you out? My answer to that is no, I'm not very worried. In fact, I'm kind of happy that they're doing this. It further,
Yeah, it helps you out.
It further proves my case that I've been saying this for 3 years. Oh,
Right.
Thank you, Facebook.
Right.
From the least likely source.
Yeah.
Yeah,
it's just more validation for what you're doing.
Exactly. And a lot of people says that, Facebook might choke you guys out or whatever. First of all, this industry is so large. This market is so large.
There's a lot of
for
room.
any single player to choke, quote unquote, choke anyone out. They're really gonna have like a hold over all the tech advances that's gonna happen, and a really firm grip over the loyalty of the consumer. I don't think Facebook is in a good position to say that they have any of those, right? Like they have the pay function in their Messenger app. Is anyone using them? Not really. They have this stablecoin that they want to create, but for some reason they want to make it a multi-currency stablecoin instead of just like the US dollar or like a Canadian dollar or whatever. Why make it a basket of currency? I really don't know what their line of thoughts there
Yeah.
yet. They haven't released official details, so
Yeah.
I hold my.
I think it'll be interesting to see. I'm a fan of the potential behind it, I should say, right? Like someone got mad at me on Twitter the other day because I was saying that more people will have Facebook than Bitcoin. And they're like, that's blasphemy, basically, right? And it's my point in that wasn't that Facebook coin or whatever it's going to be called is going to be better than Bitcoin. It's just that I think it's really interesting. They have over 2 billion users, and we can all. Facebook's pretty addicting, right? Like most of us probably in this room have a Facebook, whether we use it or not, or at least we had it at one point. And then like we probably all have like a mother or a grandmother that's also on Facebook,
Yeah.
right? So they've crossed the chasm, and so that's why I think that's the only reason I think is interesting is more from like people that might not be in blockchain or might not be in crypto or have anything to do with it will have some sort of token that they don't care if it's crypto or not. But I think that's really the benefit of stable coins, right? Like it's like when you're using a stable coin, you don't really care that it's crypto. You just care that it has this backing.
It gets the job done.
Exactly.
It gets the job done faster, cheaper, and more transparently.
Yeah.
Who cares if it's blockchain? It just so happened that it's blockchain, right?
Totally.
Right now, we are in the very first generation of stablecoins.
Yeah.
Actually, I don't know if I want to call it second. First generation is definitely Tether.
1.2.
Right? So let's just say Tether and all the fiat-backed stablecoin like us is still generation 1.
Yeah.
You have the very basic function of what a stablecoin is supposed to be. Stability, liquidity, transparency, not so much Tether there, but like, most of the other stablecoin like us or Gemini or USDC or whatever, we have transparency, well audited, redemption, one-to-one, parity, so on and so forth. So that's the very basic layer of a stablecoin. Now you're looking at the next layer. And what would this next layer be? Well, stablecoin, because they're built on blockchain technology and smart contract, they're programmable money, right? You can programmable additional features onto your money. Think about this for a second. How can you do that with your fiat right now? You can't. You gotta go to a store and get like a store credit card or debit card or whatever. That's how you add additional features onto your into your fiat. If you create a stable coin and program additional features and utility into the smart contract where it gives you, for example, cashback, discount, bonus, rewards, whatever, right? Now there's a whole new level of incentives for other players to jump into this. Imagine going to your gas station and there's a Shell or a Chevron stablecoin that you can use, and if you use this stablecoin at Shell or Chevron, you get like 1 or 2% discount.
Totally.
It's just like a credit card, but it's a stablecoin, right?
Yeah. No, I'm a big fan of that, and I totally agree. Like, so the future that I see is every single major retailer, brand, organization is going to have their own in-network currency, right? Like I don't see them, like I think it's nice that they would accept Bitcoin and Ethereum and so forth, but like if you're a retailer, you want more people coming to you. You want loyalty, right? You want rewards. You want retention.
Exactly.
So like you want them to use the Amazon coin or the Walmart coin
Costco
or the
coin.
Shell coin or the Costco coin. Exactly.
Bubble tea coin.
Bubble tea coin. Yeah.
You
Yeah.
know what I'm saying?
Definitely. I mean, there's just so much opportunity there. And then if you have that whole in-network currency from that standpoint, that's really where that value stands. And then, yeah.
Yeah, if there was a bubble tea coin, oh my god, that would be the only stable coin I'd be using. Or me and my girlfriend.
Or maybe you wouldn't want it to be stable, so that no, just kidding. But you know what's you know, I was talking to someone and who I respect, so I'll trust them in this, and they were talking about that they went to this big banking conference, and essentially what they were telling me was that you know, who the banks fear isn't necessarily even like startups or technology per se, or like regulation. Like who they fear is FANG, right? Like the Facebook, Apple, Netflix, Google, right? And the reason why they're saying that is because like their abilities to create these in-network values, like these in-network currencies, in-network tokens that can like obfuscate the banks. And then you have things like stable coins like we're talking about now that can help everybody else. It becomes really interesting.
Exactly. This is why us as Stably, we're focused very aggressively on our stablecoin as a service solution, where we help other businesses to, you know, it's very difficult to create a stablecoin.
Right.
You got to get the regulation down. You got to get listed. You got to get the liquidity there. You got to tell all the market makers that it's out there, and you got to process all the fund, do all the KYC, AML. It's not fun.
Right.
Right.
And frankly, like most people don't belong in that side of it.
It's not their business.
Right.
It's not Walmart business to build credit cards, or it's not Walmart business to you know, make money orders. They get the Western Union inside the Walmart to do that function, right? So similarly, we can go to Walmart and Costco and say, hey, you have an in-network effect. You can actually benefit from that. Let us help you create your own Costco or Walmart stablecoin. Why? Well, if your customer uses stablecoin to pay for stuff inside your ecosystem, you don't have to pay Visa or MasterCard 3 to 4 or 5% per transaction. You save money there. In addition, the stablecoin reserve earn interest. So going from paying 2 to 3 to 4% per transaction, you're now earning 2 to 3% a year on the interest. And you can, again, programmable money, right? You can program additional utility, benefits, discount, bonus, or whatever you want onto this. And most importantly, because it's built on blockchain technology, it's likely going to have secondary market liquidity. So now you can take that stablecoin outside of the Walmart or Costco ecosystem, where now it has secondary market liquidity. And this is kind of interesting. Imagine, like, you know, when Black Friday season come and the Costco stablecoin or the Amazon stablecoin start getting more demand than the other stablecoin or whatever, because due to all the promotion or whatever. Imagine all the marketing angle and all the promotional things that all these companies can just roll out with this potential, right? So so Facebook is not going to dominate this place. It's just a matter of time before bigger companies come in and create these Generation 2 stablecoins with added utilities onto them. You know, I look forward to having like Amazon, eBay, Costco, whatever in my digital wallet one day, because if I use these token at any one of these places, I save money, and that's what I want to do as a consumer.
Or and then like maybe just like a V1 of that is just simply getting rewards off of your Visa that are stablecoin rewards or things like that, right?
Or something
to
like
start
that.
funding the wallets.
Gen 3 stablecoin. I'm getting too far now, but I think Gen 3 stablecoin is going to be baskets of a bunch of these, right? So you have Costco, eBay, Walmart, stablecoin, whatever, right? And separately, they all have separate utilities or, you know, benefits. You can create a basket and combine all of them into one. They're still worth $1, but now you have discount at all these stores. Right? That's I think that's Generation 3. Generation 4? I don't know. I haven't looked that far yet. I got to look some more into the crystal ball.
Yeah, Generation 4 is redeemable at Mars.
Yeah, okay. Yeah. Yes.
Good.
So obviously you're pegged to USD. Is that correct? Stably's pegged to USD?
Yes.
So are you looking at other markets, looking to peg it to other fiat currencies, and which markets are
Absolutely. We're actually looking at Canadian dollar is our next one. Pesos, Filipino peso, pretty much all the countries that have large remittance corridor, we want to go in there because we can go in there, we save people money, and to us, that's instant adoption. Our custodian Prime Trust right now already support Canadian dollar, Australian pound, euro, Japanese yen. So we have that capability right now already. So it's just, but I only have a 12-person team. So, one step at a time. We're also looking at gold. So the US dollar before 1971 was backed by gold. And I really like that concept. I don't think right now for the US to like reinforce that is sensible, but I think for private companies like me to go in there and provide that, that solution, there's demand in the market, and I can create gold-backed stable coins. No problem. We have partners that already have a ton of gold that we can just tokenize and make it happen. So a lot of things to do, a lot of potential, opportunities, and again, the fact that Facebook is doing it is just like even better for me. So it makes my pitches to investor easier. So now it's just about, how are you guys gonna, compete against all these big players and survive now? It's not about, can you explain to me what a stable coin is or how can it be useful anymore? It's about, okay, it's there. How do we do this? Right. So
Who else has a question?
So one last question, my friend.
yes.
So you were mentioning how if you were to partner up with a company like Amazon or Walmart, you'd have way more liquidity because you have their books to play with in terms of balancing the stable coin to make sure that it's effective. Now, in terms of, you brought up earlier that if there was a huge demand for Amazon coin, that the price would shoot up. And something like Amazon, they're not like Binance or Bittrex that people go into the market to buy coins to play the arbitrage game. So how would you specifically make sure that something like that doesn't happen when, let's say, Black Friday?
We had this question.
Can you repeat the question?
Yeah, we had. So the question was, again, I think you asked if it's our job to go out and try and maintain price parity when all of these branded stable coins are giving out their own little promotion or deals or benefits that might affect the stability of the token. Again, it's not our job to maintain the stability in the market. It's up to the market to decide what they want to do with these fluctuations. And if on Black Friday, Amazon is telling people, hey, if you use the Amazon stablecoin to buy flat screen, you get 20% discount on your flat screen. And that costs for some reason, a 5% bump in Amazon stablecoin price. It's not my fault. It's whatever. It's Amazon that did that, right? So now there's arbitrage opportunity for people. Well, now it becomes interesting. How do you arbitrage that? You just get a bunch of these tokens, go to Amazon, buy the flat screen for 20% off, and then just go out to the market and flip the flat screen or whatever.
Well, Joe Sixpack that bought the Amazon coin being ticked off that he missed that 5% or now he's down 5%. Just like because I'd really like to know, speaking of some of this.
Yeah. So these are all things that are very I think just thought experiment right now, right? No one has done this yet, so no one really know how this might all react in the future. And I think ultimately at the end of the day, if the stablecoin issuer or administrator maintains a one-to-one parity, that's the first step, right? Be fully backed, be transparent, maintain one-to-one parity. Whatever else that happens, the market will eventually fix it. And if that inefficiency remains for too long, someone's going to start bleeding, and it's probably the issuer that's going to start bleeding. So that that means that they don't want to keep that inefficiency there for too long. They don't want to give out too much discount or benefits or whatever, because then that start causing issues with the market and whatnot. So
yeah,
it's interesting. It's a really good question.
Sure.
Does anybody else have a question?
Oh, I'm good.
Okay, go ahead, Mark.
So you touched on this a little bit based on your question, but so should there be a Black Swan event, what are your thoughts with regards to things like MakerDAO that are over collateralized and provide a basket of assets?
I think first of all, I think DAI is actually pretty cool, and I think MakerDAO/DAI will always be there as long as Ethereum remain existent and is widely adopted. I think there's always a need for a stable coin like that, because if you think about it, it's essentially a pawn shop, right? You take your ether, that you don't want to sell. You just go there, hey, let me pawn some ether. You give me these stable coin, and then I'll pay you some interest. Let's pay you that stability fee, that interest, right? It's just exactly like a pawn shop. And people need pawn shop. That sometimes you don't want to sell the ether. Sometimes you might want to hodl and just get some liquidity to do whatever, and maybe you have enough money to pay the interest only, and that's okay. And who am I to judge? So I think that will always be there. Whether or not it will gain a lot of adoption and actually scale up to be integrated with banks, big supply chains, Amazon and whatnot, I think that's very unlikely because again, it's too much risk in the system. Black swan event come, even if it has a basket of assets, it doesn't, it doesn't really help from the fact that it's not backed by the asset that it's supposed to be pegged to. You're essentially simulating the stability off of something else, and you can do that. There's nothing wrong with that. It's just that when the time comes for the black swan to strike, you better be prepared and make sure that the clients, the users who are using this are aware of that. The last thing you want them to do is be like, oh, this thing is stable, and then buy it. And next thing you know, it go like that. And, a lot of unhappy people, basically.
What I was alluding to is the fact that stable coins that are not multi-collateralized are actually more vulnerable to black swan events.
So for us, our mandate is to be pegged to the price of the dollar. So if there was a black swan event in the price of the dollar, I mean, we go down with the dollar. So our mandate is not to stay stable relative to everything else. Our mandate is to stay stable relative to the dollar. But that's why we're also creating, yen stablecoin and Australian dollar and gold stablecoin. And, it's not my job to say which one's going to succeed. I'm just going to make all of them and let the market decide.
Yeah. Good question.
Sorry, I might have misheard you. Did you say that you were surprised why Facebook is getting multiple currencies for their stablecoin?
I am pretty surprised that Facebook for trying to be practical, why they would use a basket of currency. And I guess the bet there is for there to be more stability, and in case the US dollar tanked or whatever, that there wouldn't be as much of an issue. Sure, theoretically that sounds great. Practically, do you see any basket currencies out there that people actually use? I don't see any. So how do you get that into adoption? People on Facebook want to buy something for their friends for like $100. Okay, but it's gonna be worth like 82.9 Facebook coin. Well, wait, how much is that worth? And that the price of that changes every day based on all these different currencies. So.
And then a follow-up, did you say that you wanted to adopt more than USD, like Philippine currency, for instance, among others?
Correct. Countries with very high volume remittance corridors. So Southeast Asia, the Philippines, the average, Hispanic Mexican workers that comes to the United States that works, they earn like, $50, $100 to $300 a week. They would send a lot of that back home. They'll send $50, $100, whatever, and they use MoneyGram. You know how much MoneyGram charges them? Like $12, $15 to send that thing. So just imagine the day that, they figure out that, oh, I can use stablecoin. They're going to call back home. Hey, Jose, can you find someone to sell these stablecoins for pesos back there? Oh, I don't know if I can find someone. The day that they find it, okay, we're going to start using this now. We're not using MoneyGram no more. And that's going to spread. And next thing you know.
But if you want to adopt more currencies, would that make sense that Facebook wants to adopt more currencies for the remittance process, just like you?
Yeah. Again, I don't know what Facebook is doing right now. I don't know if, it would be crazy if their currency can switch from like different currency at a click of a button. That would be crazy. Like, I don't know. We'll have to wait and see.
Yeah.
I think for a practical reason, it should be like US dollar base or like, the currency of whatever country it is.
So I think it sounds like what you're kind of draw to is like, Kory had mentioned like he wasn't sure about Facebook starting with multiple currencies, and then Kory's saying that he's going for multiple currencies,
and then maybe they're paralleling him.
I think it's more what you're talking about is just like starting with a currency and then moving on to other, which is what Kory did, right? He started one and then adopted others, as opposed to just like launching with multiple right out the gate.
If there's demand, we can make a basket of multiple currency as well. Maybe when the next 2008 hits and the demand for that basket currency come, and people are asking us, hey, do you have that? You know what? If I can make it, I'll make it. But no one's asking that right now. So
So is a moment for one more question?
Yeah.
So I just wanted to ask you if you're looking at different currency offshoots, like for example the yen, when you're looking at the Singapore and whatever their currency is tomorrow. how much transferability would you have between your different stable coins? Like, for example, if somebody wants to switch between markets based on transferability, how exactly would that work? If you thought that far ahead on your...
They would go to Binance Future Forex Market. It's
Okay.
going to come out at some point.
Cool.
Or, some future stablecoin Forex market. We have Forex exchanges right now. Or you can just go to banks to exchange it, right? One
God,
day when these
you're saying like a
stablecoins...
stablecoin forex exchange.
Yeah, so
some-
like,
yeah.
US dollar stablecoin
Yeah.
trading against yen stablecoin.
Yeah.
First of all, that's going to be much more efficient than traditional Forex.
Yeah.
Again, faster, cheaper, more transparent. I can repeat those 3 words all day.
Yeah.
So...
You had a question?
Yes, one last question. You mentioned the stablecoin for remittance and for some populations, so Southeast Asia, Central South America, people who really use like current services like Western Union, MoneyGram that are awful in fees.
Mhm.
What is your vision or your plan to get to this audience, to reach them, right? Because I mean, we are already in this room learning about this amazing new technology, but for these populations, it seems maybe very far away from anything they know.
Yeah, definitely. I think the technology is definitely there already. That part we don't have to figure out anymore. It comes down to education and UI, UX, right?
Yeah.
UX. So I'll touch on UX first. Crypto right now is not UX friendly. You send crypto to someone, there's a hash key. Oh yeah, have fun trying to tell like a Filipino grandmother to like put in the hash key, right? Or address. So that needs to get simpler and easier with a nicer ad, with some nice graphic and button that's simple, like as simple as Venmo. When stablecoins and crypto can get as simple as Venmo, as easy to use as PayPal and Venmo, that's when I think people are gonna start adopting it en masse. That's what we're trying to do at Stably. We want to build beautiful apps and interface that's easy for people to use. So that's the one of the ingredients. The other ingredient is education. People don't know about it yet. Technology is moving way faster than the rate that people are discovering information, right? So we're moving at like 21st century speed. A lot of the other countries are still using technology from the last century to transfer money and stuff. So building local communities, going out there and host events like this in local languages, translating all of our materials over to local languages, and getting people to go to these meetups. We educate them about it. Hey, if they know about it and the economic benefit is already there, they can save money. What the heck, they're gonna start using it, and they're gonna tell their friends and family who's gonna come to more of these events, or join our Telegram group where we can tell you about everything, right? So. More of these grassroots initiatives in all over the world, I think it's going to drive the adoption of our product and stablecoins in general.
Good.
I'm just thinking out loud, but is this a right assumption that with your fiat cap going up, the volatility the fluctuation will be higher as well, because it's going to take much more fiat capital to stabilize the coin? If it is $1 billion cap, it's much more fiat currency goes to stabilizing 1.001 than if it is like
Sure.
100 million.
Let me cut to the chase. What if someone George Soros attack my peg, right?
Yeah, indeed.
So again, straight to the chase. If someone George Soros my stablecoin, they might be successful in acquiring all the supply out there and then redeeming it, but they're gonna do it at a very great cost to themselves. Probably at a cost greater than what I already raised in money and whatever, because if you keep buying up supply in the market, no matter how much money people are selling it for, at some point you either run out of money, you get margin call, or if you're really rich and then you really want to take out this project, then feel free to do so. But pay up. Yeah. Guess who's gonna be selling that to him at like $1.20, $1.30? Oh, not me. My market makers, of course.
So Kory, who do you think is?
That's a great strategy.
So we're thinking, we've been talking about Facebook with the stable coin, but who do you think is going to be like the first retailer to adopt a stable coin?
I think it's gonna be an e-commerce company.
Yeah.
God, I really want a gas station to do it because I can use some gas discount right now with my SUV. But I think it's gonna be e-commerce companies. Someone just needs to sit down and tell Jeff Bezos, dude, there's this company right in your backyard. They're doing some great shit. You need to talk to them. That day is when, we start. Maybe not Amazon. Maybe like OfferUp.com. You guys ever use OfferUp.com? Oh, wait. This is Canada. I forgot. What's the OfferUp like?
Like Letgo or Craigslist. It's kind of like Craigslist, but an app.
Anyway, e-commerce.
Commerce transactions. Yeah, totally.
Yeah, I mean, using a stablecoin to pay for things is definitely a save cost, right? Oh, you know what? I take it back. I think cannabis is going to be the first major use case. I don't know about Canada, but at least I know my market in the U.S. It costs, I think, about 5% plus like 30 cents to $1 per transaction for a cannabis merchant to accept credit card or Visa debit, Visa or MasterCard. And the reason is, cannabis banking in the U.S. is really difficult. And so they have to rely on these niche payment processing services that, charge like 5 to 6%.
And they know they can do it because they don't have any competition.
Yeah, dude, imagine if they find out that, oh, shoot, we can use a stable coin. That's actually one of our growth initiatives right now, to reach out to all the
no
cannabis.
pun intended.
Oh, I see. Hey, I like that. Growth initiative.
Anyways, all right. Well, hey, Kory, thank you so much for coming up to Vancouver,
Absolutely.
the place where Stably was founded, even though you're not from.
It's great to be back home.
Really appreciate you coming up here for our TF Blockchain Vancouver event. You've been a great partner for TF Blockchain in the past, and looking forward to continuing to see you grow. Thank you for listening to the TF Blockchain podcast. We appreciate your support as we continue our mission to connect the broader business and technology community with blockchain innovators. For the most up-to-date information on all things TF Blockchain, please visit tfblock.io. Please like and subscribe to our podcast to be the first to hear from our amazing speakers changing the world through blockchain and crypto. If you're interested in partnering with the TF Blockchain podcast, please email us at podcast@tfblock.io. Be on the lookout for TF Blockchain chapters coming to your city, and please reach out to us if interested in becoming a chapter director. We hope to see you soon at one of our live events. Thanks for listening, and remember, stay crypto, my friends. The views and opinions expressed at TF Blockchain events and podcasts are solely those of the ones presenting, and do not necessarily reflect the position or opinion of TF Blockchain. TF Blockchain is not responsible for the opinions or content of its guests and does not endorse any particular company or currency. This podcast is for informational purposes only and should not be used to make investment decisions.